Hey traders, welcome back to this week's weekly Forex forecast. Last week we saw quite a big sell-off in the DXY at the end of the week, and going into this week, US dollar shorts are one of the top themes I'm going to be looking at trading. If we have a look at euro dollar, you can see overall we're still kind of ranging. However, on balance, I do prefer long opportunities in euro dollar next week. What I want to see is euro dollar coming down, and essentially what I'll be looking to do is range trade this. So in other words, buying support in a range or a correction in a market which overall is trending to the upside. So what I'll be looking for next week is I'll be looking for euro dollar to breach the 1.12195. If we can take out the 1.12195 next week, this is where I'm going to drop down. I'm going to begin to look for bullish reversal patterns, inverse head and shoulders, double bottoms. I'm going to be looking for a 1 or 2 day reversal back inside the range. And of course, these are the exact setups that I'm trading and looking at every single day with GMT members throughout the week. If we end up down below the 1.10787, this is the second place, and there's a really nice key area of support down here as well. This is the second place I can pull the trigger on a long position, whether I'm already long or not. Now, next week, I don't anticipate these levels being taken out. Very rarely do they get taken out. You have to see either some kind of major catalyst or, usually either in the news or unexpected. Or sometimes you do get, bigger moves. The last week, US dollar CAD to the downside was a market that took out its second lower bound because we had such a strong sell-off in the DXY. So I can pull the trigger on a long opportunity, also below the 1.10787, because this is where we become extremely oversold during the week. And the final thing you can look for next week is you can look for euro dollar to break down towards the lower bound. But if it doesn't get there, because the dollar is so weak that euro dollar simply can't pull back enough, you can look for the re-break back above the moving average, and that sets up the bull flag setup. Usually, if you are going to get that, one opportunity a week in the 4-hour time frame is pretty much what you get. You drop down to the 1 hour 15 minutes, you can maybe capture, 2 bull flag or bear flag opportunities within an asset. So those are the 3 primary setups for euro US dollar next week. I can only be a buyer of euro dollar next week. I cannot short euro dollar under any circumstances. Okay, so moving on to the portfolio selection, there are a couple of things to pay attention to next week. We do have the RBNZ on Wednesday, and they are expected to cut rates by 25 basis points. I am going to be looking at New Zealand shorts as a theme, but I'm going to be looking at trading New Zealand pairs after Wednesday's RBNZ meeting. We also have on Monday a bank holiday in the US and also the UK, so Monday is likely to be slow. Forex markets are probably going to start to pick up next week, kind of Tuesday, Wednesday onwards. So just bear that in mind if you are trading next week. So alongside the New Zealand dollar, which is one of my short themes next week, to the upside, I do like the pound, I do like the euro, and I do like the Swiss franc. Pretty straightforward stuff. We're seeing money coming out of the dollar, and it's going back into those kind of EU majors. So those are the 3 currencies I want to be primarily looking for long setups in next week. And to the short side, we've already discussed the New Zealand dollar, and it's pretty straightforward from there. I want to be short the US dollar. In other words, looking for short opportunities in the US dollar, especially if the US dollar initially rises or we see some strength in the dollar, I'll be looking for short opportunities. And also the Aussie dollar, because the money is coming out of the dollar and going into those kind of major DXY components. So, the euro, the pound, the Swiss franc, etc. Japanese yens are also kind of on the short side next week, but the problem is with money coming out of the dollar, yes, it's going into the EU majors, but we can also see that going into the yen as well. So probably on balance, I would prefer to avoid Japanese yen shorts. And also on the table, pound CAD, euro CAD, CAD franc to the downside could also be something to look at next week. So the primary pairs I'm looking at trading next week on the top of my watch list, and also we're going to look at in today's video. I like pound dollar to the upside, pound Aussie to the upside, pound New Zealand to the upside. Also euro dollar to the upside, euro Aussie to the upside, euro New Zealand to the upside. And also US dollar franc to the downside, Aussie franc to the downside, and New Zealand franc to the downside. Kicking off the watch list, as always, with crude oil, we noted this big breakout of the big descending triangle pattern back in April, and the market has just been digesting this sell-off pretty much ever since. So really all I've been looking for is if crude oil is pushing higher, I'm looking for potential short opportunities, and there is no change in that once again this week. So I'd like to see crude oil coming up, taking out the 65.29, breaching these prior highs here, and there are no real other prior highs until we get all the way back here because of how volatile this was. So if we can breach these highs, these key areas of resistance over here, and turn overbought during the week in a market I'm primarily looking to be short, then this is where above the 65.29 next week, I'm going to begin to look for double tops, head and shoulder patterns on the lower time frames, and I'm looking to capture 1 to 2 days worth of reversal back inside the range. The second thing I can look for next week, although I don't expect it to happen, is if we break the 68.82. This is the second place I can pull the trigger on a short position, whether I'm short already or not, because we've become extremely overbought if we cross the gold level next week. And the third thing is, with commodities, breakout trading actually tends to work better than in Forex. If you do start to make your way back towards the upper bound, and you see that momentum break during the week, you can look for the moving average to follow it, and you get that bear flag opportunity down to the profit taking target to the downside at the 58.22. So very much like this break down below here with momentum, and look at the correction back in, hugs the moving average, and that kickstarts the next leg down. Continuing on with the dollar pairs then, after looking at euro dollar, I do like pound dollar to the upside. Now, something to note with pound dollar is we're kind of breaking out of this consolidation. However, we are extended on a weekly basis and now on a daily basis as well. So there's a very good chance that the pound needs to pull back before heading high next week. So what I'd like to see in pound dollar primarily is a pullback and a breach of the 1.3387. This is where we turn oversold during the week. And this is where I'm going to drop down and start to look for bullish reversal patterns, double bottoms, inverse head and shoulders. I'm going to be looking for a 1 or 2 day reversal to the upside. If we end up down below the 1.3240, this is highly unlikely as we almost took out the second upper bound last week. But if we were theoretically to end up down below here, this is where we become extremely oversold during the week. It is the second place. Whether I'm long already or not, I can pull the trigger on a long opportunity in pound dollar. And the third and final thing is we may get the pullback and the correction for a day or two. And if we fail to take out the lower bound and you get the re-break, again, that would be where you could look for that bull flag setup, because this is now a trending market with the breakout. And I would be looking up towards the profit taking target of the 1.36821. Next is US dollar Swiss franc. I can either be short or do nothing. I cannot buy this market next week. And look at what we're seeing now. We're starting to break down. It looks like we're getting the big kind of bear flag breakout. We had the momentum down, consolidation. Now we're starting to make our way down. So what I'd like to see next week, I'd like to see this market pull back. The dollar is a little bit oversold. We saw that just now, relative to the pound at least as well. And so I would like to see the US dollar pulling back next week, taking out the upper bound. This is where we become overbought during the week in this market, above the 0.83177. Once we take this out, if we can take this out next week, this is where I'm going to start to look for double tops, head and shoulder reversal patterns. I'm looking for buyers to start to run out of steam and pull their positions. And usually that results in a 1 or 2 day liquidation back inside the range. The second place I can look for a short position, although I don't anticipate this market coming up to there, is a 0.84313. This is where we turn extremely overbought during the week. And although it's highly unlikely we actually get there, it is the second place reactively. I can pull the trigger on a second position, or it would be a good initial position if I wasn't already short. And the third and final thing, of course, is you can look for the correction, the break above the moving average. It kind of makes its way towards the upper bound, but fails to get there. And then you get the re-break during the week, and that sets up your potential bear flag into the profit taking target at the 0.80903. And there's a decent chance we actually come down and take out the major low here, because again, this looks like a big correction down to at least the prior low and possibly even further. So I can only be short US dollar Swiss franc next week. I cannot buy this market under any circumstance. Moving on to the Aussie pairs, starting with EurAusd, I can either be a buyer of this market or do nothing next week. So what I'd like to see is EurAusd coming down and taking out the 1.72726. We also have a really nice major low. So as soon as we turn oversold during the week, I'm looking left, and there is a really nice low down here. So a prior support level or a prior price level, which rejected and then pushed price higher. So that's where I want to see in the future. So looking at what's in the past, looking into the future. If we can come down again and attempt to break this low and sellers start to struggle and they get trapped, I'll be looking for them to pull their positions again, looking for a similar rejection in the future. And that's where I'll be looking for a 1 or 2 day opportunity to the upside next week. If we end up down below the 1.7053, it's not expected to happen. It will happen fairly rarely. But if we do end up down below here, I can pull the trigger on a long opportunity, either for the second time, if I'm already long, or on an initial position. But I don't expect it to get down there. These are kind of plan B areas, where I'll be looking to take a trade next week. And the third and final thing is we're already down below the moving average. So if you start to get the re-break next week and it breaks higher, look for the moving average to track it, consolidation, and a rally into the profit taking target to the upside, the 1.7712. Next is pound Aussie. Again, I can either be a buyer or do nothing in this market next week. What I want to see is it come down and take out the 2.06142. This makes this market oversold during the week. And that's where I'm going to start to look for double bottoms, inverse head and shoulders. To the left-hand side, we have a nice low here and we have a nice low down here. So this would be the area between these two lows I'd be looking. So obviously this low comes first. If we trade into this low, I'm going to look left and say, are we seeing the market basically go through this low like a hot knife through butter? If so, then I'm going to look here. Again, do we see the market going straight through here? If so, I'd look to the next one. But as soon as we trade into one of these lows and start to run out of steam and you start seeing the price action, momentum fading, each time it pushes down, it struggles. That's what I'm going to be looking for sellers to pull their positions. You get the short covering rally for 1 or 2 days back inside the range. If we end up down below the 2.03817, although this is unexpected, if we do end up down below here, we are extremely oversold during the week, and this is the second place I can pull the trigger on a long position. And the third and final thing, we start to make our way down towards the lower bound. You can see we're making higher highs and higher lows. And instead of taking out the lower bound, you get the big re-break with momentum. It pulls back, and you should see momentum and then kind of almost a sideways move. That sets up your bull flag setup into the profit taking zone at the 2.10792. And the final Aussie pair is Aussie franc. Now again, similar to crude oil, we had the big sell-off when we had the tariffs going on, and then we've just digested this move the whole time. Now it looks like we're starting to break out of this kind of channel. Bit of a wonky channel, but you get my point. We're kind of breaking out this upwards channel. So what I'd like to see is I'd like to see this market coming back up, turning overbought during the week, and especially if we can take out this prior high. That would be a great place to start to look for buyers to run out of steam, for buyers to get trapped, pull their positions for a 1 or 2 day liquidation back inside the range. If we end up above the 0.54976, we are extremely overbought during the week. Something abnormal has happened. I can also pull the trigger on a short position above there. Between this range, I can only pull the trigger once. I can't keep adding to a position between these two levels. I can pull the trigger once, and if we breach this, I can pull the trigger a second time. If we start to pull back, and because the market is weak and we're already breaking out, we fail to take out the upper bound, and you get what's called a fast market. So it's so strong that it can't even pull back and turn overbought during the week. Then you can look for that bear flag setup, pull back into the moving average, and move away down to the profit taking target at the 0.52404. Good example over here, breaks down below it, consolidates, and then you get the next leg down. Wrapping up the Forex universe with the New Zealand pairs before moving on to gold and silver. Starting with Euro New Zealand, I can either buy this market or do nothing. I cannot sell this market next week. And I'm only going to be trading these after the RBNZ on Wednesday. So what I really want to see is this. If the event is kind of non-eventful and nothing much really happens, it's kind of a neutral outcome, then I'm just going to treat this as if there were no event at all. So what I'd like to see is I'd like to see the market come down, take out the lower bound below the 1.87470, and this is where I'm going to begin to look for a double bottom, inverse head and shoulders, those bullish reversal patterns on a lower time frame, and I'm going to be looking for a 1 or 2 day liquidation back inside the range. If we get an extremely bullish outcome for the New Zealand dollar, this is probably the least likely scenario because we are expecting a rate cut, and on balance, I think we're probably going to see weakness from the New Zealand. And don't forget, New Zealand short is one of the things I'm looking at primarily next week. If we, for whatever reason, are caught off guard and we end up with a bullish outcome from the New Zealand dollar, I can still only buy Euro New Zealand. I still can't sell it. So what that means is, if we get a bullish outcome, maybe they don't cut rates, hypothetically, and they say they're not going to cut rates for the foreseeable future, and we see the New Zealand dollar strengthen, and Euro New Zealand comes down to the 1.85160, and we turn extremely oversold during the week. This is the second place I can pull the trigger on a long position. And the third and final thing is if we get a bearish outcome from the RBNZ on Wednesday, what you're likely to see is the market chopping around doing nothing. And then you get that kind of explosive move to the upside because the New Zealand dollar sells off. And you get that follow through trade. Very often happens after the interest rate decision into, in this case, the upper bound, the profit taking target to the upside, the 1.9209. All of the New Zealand pairs that I'm going to be looking at next week and we're going to look at in today's video, I'm going to be looking through the lens of these three outcomes. Next is pound New Zealand. I can either be long or do nothing. I cannot sell this market next week. So again, if we have a neutral outcome, I'm going to be looking for pound New Zealand to make its way down to the lower bound at the 2.23567. This is where we turn overbought during the week and we enter the buy zone. There's a really nice low right here, right on it. This is where I'm going to be looking for sellers to attempt to break through and then fail. And that failure and that liquidation back inside the range for 1 or 2 days, that's where I'm going to be looking to capture profit next week in this asset. If we end up with a very bullish outcome unexpectedly, and we trade below the 2.21009, this is where we become extremely oversold during the week, and I can pull the trigger on a long position from below here as well. And the third and final thing, of course, that bearish outcome, you get it kind of correcting and then it explodes higher because they cut rates, maybe there's a 50 basis point cut. Again, not saying they're going to do that. I'm giving you a hypothetical situation where we could see a more bearish outcome than expected and then the New Zealand dollar sells off hard because of it. So we get a bearish, an unexpected bearish outcome, and we get that bull flag follow through setup into the profit taking zone to the upside next week, the 2.28681. And the final Forex pair is New Zealand franc. Now this is very similar to Aussie franc. We had the big sell-off and we've just digested the move. And now we've got this kind of head and shoulders pattern, which is actually confirmed on the breakdown below here. So we've already confirmed this. Now patterns can morph, but at the moment we've confirmed a reversal after this big correction. What I would like to see is, I would like to see kind of one more false attempt to the upside. Now, if there's a non-event next week and the event passes and nothing really happens, I'm just going to treat this as a normal setup. I would like to see strength come into New Zealand franc. This pattern potentially fails. We trade above the 0.49889. We turn overbought during the week in a market I'm looking to be short. And this high right here is the high I'll be looking at. So we trade above here and buyers start to pull their positions, and that failure back inside the range is what I'll be looking for next week. If we end up with the bullish outcome in New Zealand franc and we trade above the second upper bound, so the gold range, we basically breach the gold range above the 0.50642. This is where we become extremely overbought during the week. It is a place I can also pull the trigger on a short position. And if you've got an interest rate decision, you can, in that scenario, test these gold levels because you've got a catalyst, so the volatility is much higher. There's a reason for, abnormal volatility to come into the asset if there's a catalyst. If there's not, then you shouldn't really expect these to be taken out. They can do occasionally, but very rarely. The third and final thing then would be that bearish outcome from the RBNZ. The market chops around. You get the breakout to the downside with New Zealand weakness. They cut rates. Maybe they cut rates more than expected, or say, in future they're going to cut rates faster than expected. You can look for the bear flag setup down to the profit taking zone at the 0.48385. I can only sell this market next week, regardless of what happens on the RBNZ on Wednesday. Okay, so wrapping up the video with gold and silver, and because I have such a bearish bias on the US dollar heading into next week in terms of it being one of the top short themes, I can only be a buyer in gold and silver. So I'm not going to be looking for short opportunities in gold or silver. I'm going to be looking for buying opportunities only in both of those assets. So what I want to see is I want to see gold come down, take out the 3261.98, and there is a low over here, but actually I'd be looking at this low as well, because this would be a textbook inverse head and shoulders in the bigger picture. Because if we came down, tested this in the buy zone, you can see that would be the right shoulder and the bigger breakout would be above there. That would be the third wave kicking in potentially above that high. So I'd like to see gold pull back, breach the 3261.98. This is where we become oversold during the week. This is where we enter the buy zone. And I'm going to be looking for inverse head and shoulders, double bottom patterns for a 1 or 2 day liquidation back inside the range. We're not going to come down, take this out, and then reverse and break this high all in 1 week. This probably happened over the course of maybe 2 weeks. But I will be looking for a 1 or 2 day reversal back inside the range if we turn oversold. If we breach the 316947, very difficult to see that taking place next week. But if we do breach this, it is the second place I can pull the trigger on a long position. And what we're more likely to see than taking out the second lower bound is an attempt to take out the first lower bound, a re-break, and then that sets up that bull flag setup into not just the prior high, but also the profit taking target in gold at the 3447.01. So I can only buy gold next week. I cannot short gold next week. Wrapping up the video, as always, with silver, I can only buy this market. I cannot sell this market. So what I want to see is, I want to see silver coming down, entering the buy zone. And that is next week below the 31.84. We also have 1, 2 really nice lows. So it's almost like a range trade because we're coming down, bouncing up. Coming down, bouncing up. If we can come down again, especially test these lows in the buy zone, this is where I'm going to be looking for sellers to get trapped once again. This is where I'm going to be looking in the past for future price points which can drive price higher. And I'm going to be looking for that 1 or 2 day liquidation back inside the range. If we end up below the 30.23, something abnormal has happened and this is extremely oversold during the week. I can pull the trigger on a second position if I so wish, but it's very unlikely this gets taken out next week in my view, unless we have some kind of unexpected catalyst. And the third and final thing is very much like in gold and in commodities, like I said at the beginning of the video, breakout trading works even better than in Forex. If you start to make your way down towards the lower bound and you get the momentum breakout during the week, and it should be clear, it should be very, very clear, breaks above the moving average and then it just kind of holds and sits. That's the bull flag setup into profit taking target to the upside for this week at the 35.06. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.